PDAC 2019, and I am joined by the Mercenary Geologist himself, Mr. Mickey Fulp. Mickey, thank you again for joining us. It's always a pleasure talking to you.
Thanks as always. Thanks to SmallCapPower.
Now, you're here today, or you're here at the conference. You're talking about why you don't own mining companies. So, tell us the thesis behind that.
It's a talk I gave you yesterday, why I don't own mining companies. And I don't own mining companies because over the last 15 years, they haven't rewarded their shareholders. So I went through this thought experiment. The hypothesis was mining companies are an investment, and I showed that they have not been since the bull market for gold started in 2003. They have not been profitable. They have not rewarded their shareholders either with share price appreciation or dividends. And so the hypothesis that mining is an investment is wrong and should be rejected. What you want to do instead of investing in mining companies is you want to speculate in exploration companies.
But speculation is a tough game, and we know exploration is a very tough game as well. So why do you want to put your faith in that as opposed to a more, as you say, as opposed to mining companies?
From 2003 to 2013, the 7 largest gold mining companies in the world were profitable from 2 to 4 years of that 11-year period, and the best performer during that period of time was Randgold, and the worst performer was Barrick. So there's a reason that Randgold merged with Barrick and put the CEO of Randgold in as the CEO of Barrick. But that was the greatest bull market we've ever seen, and if a mining company can't be profitable for less than 20% of the time, then I would submit it's not a company you want to put your hard-earned dollars. And the reason is they've run gold mining as a growth industry. It's not a growth industry. Mining is a value industry. And they've adopted this Wall Street style of capitalism where they increase resources and reserves, and they mine quantity of ounces versus quality ounces. And any capital intensive industry is about margin. And they have very low margins, and really what's happened is the major gold miners have gone into debt, taken on debt, and raised equity to declare dividends to their shareholders.
What have been some of your recent wins, Mickey?
2 recent wins, very proud of these. Ely Gold royalties. We picked it 13 months ago at 9 cents. It doubled last week to 18, so we got our double there. Not quite in 12 months, but in 13 months, not a bad deal. And then my other big winner over the last year and a half is Trilogy Metals. Picked that at 65 cents. It closed Friday at $2.30 in US dollars, American Stock Exchange listed company. So I own both those companies, of course, and they're sponsors of my website. So I'm biased.
Well, Mickey, thank you so much for sharing some of these thoughts with us. We'll certainly look to speak with you again soon.
All right,
Appreciate
thanks
it.
a lot. Always my pleasure.